Okay, quick update. We're trying to catch this live as it's happening. This is the pound Swiss, and we've been short the pound Swiss, and so far we've picked up 54 pips on this trade to the downside. Also short the pound dollar. It's currently 7:15 p.m. New York time, Thursday, October 6th, U.S. time. And again, this what we're looking at now is the pound dollar 30-minute time frame. We picked up approximately 50 pips here, and then earlier today we picked up approximately 40 pips selling the pound dollar. So we're catching this live as we're closing our positions here. There's a huge move here on the pound dollar. Support here from 1.26, approximately 2600 level, all the way down here to the 1.20 I've got right here on this chart, 1.2026. So we're looking at like almost a 600 pip move here. Let me get an update on another chart program here. And again, we were also short the pound Swiss. Let me show you another chart. So let's take a look at the 30-minute time frame here for the pound dollar. Now, at the rollover, we were talking about this after the rollover, and the possibility of the HL30 was brought up. So with the HL30, first of all, you want to trade it in the direction of the trend, and this is not in the direction of the trend. Now, it was expected by some that we would see some kind of a bounce, but if there was going to be some kind of a bounce, that it would be relatively short-lived. So with the HL30, I highly recommend in a strong trend like this to just stay away from it, leave it alone, unless it hits a major support level that you can see on the larger time frames like the 4-hour or the daily or an extension target. Very often with extension targets, and I'm talking about good, clean, clear Fibonacci extension targets, not ones where it's difficult to get the right price swing and it looks a bit choppy and you're not too sure if you're looking at the right A high and B low, things like that. You want to make sure you're looking at a very clear, clean price swing, the structure with the A, B, C price structure, so that there's no mistaking that you're watching price reach that extension target. And very often when you get clear opportunities like that to identify and use the tool, the Fibonacci tool with the appropriate A, B price swing structure, it's going to give you a very clear extension target, and those extension targets will very often line up with major support or resistance or psychological levels very often. It doesn't always happen where it's perfect like that, but that's what I'm getting at is that, until price actually reaches a major support level or a solid major Fibonacci extension target, then I would not be looking to trade bounces back up here anymore. I mean, at that point, I would just stay out of the way, and I would continue to hold on to my short positions or add to them as often as possible. Whenever you get the opportunity, everybody's got a different strategy or a different technique to get back into a trade, which is what we've been doing over the past week. So today was a really big day, over 100 pips so far, and we still have a couple of open trades that are still positive, and I'm just waiting for them to hit their final targets as we're trading into the Asian session. Now, tomorrow is non-farm payrolls. So again, for those of you that were asking, and we were talking about this after the rollover, that the HL30, it will appear, but it is not a good idea to trade against a major trend like this. So now everybody's scrambling to try to figure out what it was or what caused this drop in the pound dollar. Let's go ahead and go to that live candle right there. So about 600 pips, and then it rolls right back up about 300 pips. So you want to be careful with that. Some comments coming out of France, I believe, saying that, that Britain must suffer consequences, things like that, of leaving the European Union. A couple of other comments. One was from the Financial Times, and then other comments about possible big orders running through. One website said something about a fat finger trade. So there's just a couple of different ways to do it, but again, a couple of ways to analyze this information and what's happening here. But again, you really shouldn't be long or trying to trade any kind of bounces with something like this, especially when if we go to another chart here, let's go ahead and see if I can't bring this in. If we tighten up the charts and we go back to, let's say, well, this is where we are now. This is, Tuesday. We got Wednesday, Tuesday, Monday, Friday, and then we had this range of consolidation all right here that lasted for about a week. So when we finally got these continuation breakout trades to the downside, we've traded them, but that breakout and the new extension of this continued downtrend in the pound dollar was because of collectively the market sentiment, hearing enough speculation, hearing enough information, hearing enough and watching it technically that the pound should continue to weaken. It doesn't surprise us at all, along with the dollar strengthening over the past couple of weeks as well, especially this last week and this week. So, it all works together. I mean, you can see it across the market. We've been talking about that uptrend line. I'll show you in another update. The uptrend line on the dollar index on the daily time frame. You can go back to some of those videos earlier in the week and last week where we were talking about watching the dollar strengthen and holding at an uptrend line technically, watching volume levels on the dollar. And just all of this is confirmation. I mean, all of this work, the market's working technically and collectively in a really well working manner. I mean, there really isn't a whole lot of guessing here. It's pretty easy to see what's going on right now. So again, the consolidation for about a week was because everybody was sort of trying to still figure out where's the pound headed, and then we just got more negative sentiment and more negative comments, more negative speculation on the pound, and it clearly shows here. So again, really no reason to start trading opposite of a trend like this. I mean, it's expected to continue, but we're down here at 120 now, 1.2000 level almost. So I'm not going to say that we're going to see a bounce, and this could be all that we see out of this leading into non-farm payrolls. Right now, we're looking at the pound dollar 1 hour time frame right now. So leading into non-farm payrolls tomorrow, we've got a low down here. It might change, but we've got a huge trading range right now, and it's difficult to say what's going to happen or if it's going to even react to non-farm payrolls tomorrow. We might have to be trading something else entirely. Euro, dollar, yen, something like that. I mean, we're going to have to be looking for something. There's Canadian news tomorrow about the same time as non-farm payrolls, so we might have to trade, the dollar Canadian. It really depends, and this one might not give me any other opportunities for the rest of this week, but we've made a hell of a lot of money today. And this didn't surprise me at all. The 600 pip drop surprised me. But, when we were already short and it's running into these targets and we're closing our second position on this, it's just, it doesn't surprise me to see it drop like that. And, I'm right there when my alarms go off. So I'm executing these trades with the trade copier as well. Let's go back over to the pound Swiss. I mean, this one's going to be doing, for the most part, the same thing. I think that, I don't know if I'm going to get an opportunity to really trade it during non-farm payrolls or as a result of non-farm payrolls, but I'll keep an eye on it. But again, this is just a huge move here, and please be very careful. So we're able to catch it almost live. I mean, as we're closing our positions here, and it's the other reason that I'm going to pause here for a moment because we still have, as I said, a couple of other positions. So we've made clearly well over 100 pips today, and where I'm still closing trades. I don't know that I'm going to be opening any other positions. I'll probably have to let things settle. Let's go to the euro dollar. This is the euro dollar 30-minute time frame right now, and it looks like it'll probably bounce off of this level a little bit, but the situation with the HL30 is this. The HL30, the continuation breakout trade, that one is the one that I claim is reliable 90 to 95% of the time. And it is an awesome trading strategy, the breakout strategy. The only time that I might have a trade that fails is if I misread or miscalculate something. And that is truly the case with the continuation breakout trade. The situation is with the continuation breakout trade is that you have to wait for it. It doesn't set up very often. I mean, like I showed you a moment ago in the pound dollar, there was a lot of consolidation for about a week. With consolidation like that, I'm not going to see continuation breakout trades. It's going to be a while, but eventually when I get the continuation breakout trades, it will start to pay off and trigger, which is what we see right here. Let me go ahead and move things around here on the pound dollar. So you see this range of consolidation, and then you see where it starts to trigger these continuation breakout trades, and we get one here, and then we get another one the following day, and then it just takes a couple of more days and it breaks down here again. And then here we are today with more continuation breakout trades. So you can see that the continuation breakout trade just keeps working and paying and paying and paying. You have to be aware of the larger time frames. But with the HL30 back here to the euro dollar, first of all, you want to be trading in the direction of the trend, but the HL30 is more likely to fail. You might experience HL30s that will fail more often than the continuation breakout trade. And you have to know, I have techniques and strategies and methods to keep me from getting into HL30s that are likely to fail. You have to use it at the right place, at the right time, at the right location. You have to be really aware of the conditions. So there are times when that the ability to see if it could potentially fail or not, this is sort of a checklist that I go through along with, just looking at the charts. And if things don't line up right, then it's best to just leave it alone. If it just doesn't look correct, if it doesn't look like it's doing what I expect, I have to stay away from it. Even if the HL30 ends up working, it really doesn't matter. If it's something that seems more risky to me, then I stay away from it. And that's just another way to protect yourself. When you feel that, it doesn't matter whether it's my strategy or anybody else's or even your own. If it doesn't look right, the way you like to execute it, the way you know it's picture perfect, I recommend staying away from it. It's hard to do, but you will make more money and you'll save more money by not making those mistakes in the long run. It's really important that you have and you develop that skill to be able to just say to yourself, it's not sizing up and it's not shaping up the way I normally like to trade it. There's a few things that seem to be missing as far as confirmation, so I'm just going to stay away from it. Just stop looking at it, close the chart, walk away, or start looking at another chart and another setup. You have to stay away from it. So with the HL30, I'm not going to be, with the possibility of trading any HL30s here or bounce off of this support level on the euro dollar, I'm not going to trade it here. So the alternative would be, I would stay away from trading the HL30s, but if time, over time, over the next couple of hours, if price spikes down and then turns around and comes back up and it doesn't go too far, it could turn into a different strategy altogether. So it would not be an HL30, but it might be something like the T2 pattern. The T2 pattern is a major reversal that has a bigger profit target than the HL30. It's more reliable than the HL30, and it's something that we executed on the euro dollar last Friday, just before the market closed, a few hours before the market closed last Friday. So these are just some possibilities. I won't be executing an HL30 in this trading environment anyway, especially with the possibility of price just spiking up and down sharply. You got to be careful. You've got to protect yourself. And again, sometimes when it's just too risky, it's just best to just stay away from it and stay out. So thank you for watching this video. I appreciate your time. I hope that you trade well. I hope you didn't get stuck in a trade like this where you were trying to trade it the opposite direction. I hope that you made a lot of money on this one. Please be very, very careful. It's difficult to say where it's going to go next. I mean, it's hard to say if it's going to come back up here and test the level that it broke out of once again, which would be yesterday's support level. That's a possibility. And that's, from 23.25 all the way up here to 2600. That's a big move. So please be really careful. These retracements could cover more than 100 pips. And if you're not prepared to, use a stop loss larger than maybe 20 or 30 pips, I would stay away from this one for the time being. Focus in on one of the other currency pairs, Australian dollar, dollar Canadian, dollar yen, something like that. And again, for those of you who are using the trade copier and those of you who just signed up, thank you very much. I appreciate your membership. Congratulations if you earned profits on these trades with me. I did execute these trades with the trade copier, and we'll keep on looking for more. We'll keep looking for more continuation breakout trades and more trading opportunities, and we'll be trading through non-farm payrolls as well. And I'll be sending out another update video tomorrow at the close, after the close tomorrow. Also, one other thing, the Platinum Challenge It's for the Platinum Signal Service, Trade Copier Signal Service. Uh, One of the things that I'm doing with that, and I've got a lot of questions, is why is it so, it's $100 right now until Friday at midnight Eastern time. I'm doing that because, first of all, I've had a lot of requests, and people want to see other people's statements, not just mine. Everybody knows that you can, game and play around with the performance from MyFX book, so people really don't trust MyFX book. You don't. A lot of other services don't post all of their open trades. Everything that you see with my trades are all my open trades. I mean, I always use a stop loss. I would much rather experience a 30 pip or 40 pip or even a 50 pip stop loss instead of leaving a trade open where it's negative 100, 200, or 300 pips, because that's what some of the other companies, the other signal services will do. They will not use a stop loss. They leave the trade open for many, many weeks or months, as a matter of fact, and hope that the trade comes back to positive territory. And then they close the trade and then they claim it as a win. And, I don't trade that way, and you don't have to. You can make a living using a fixed stop loss according to the strategy. And as I was saying, I'd much rather experience a 50 pip stop loss because all I got to do is go out and look for another trade or two, and then I'm going to earn back the loss. And then I'm just right back on track, and I just continue to execute correctly the way I'm supposed to. And just like all of this week, I mean, we've had great trading opportunities. We've even had commodities trades. I showed you some of the videos earlier this week about the breakouts there. It's just been an outstanding week for us. And that is the way it works. There's obviously some better weeks than other weeks. There's more activity. But the reason that I'm doing this challenge is to get the trade copier in as many people's hands as possible and making it affordable and trying to help out, I know a lot of people are on budgets. I know a lot of people have used other signal services and they're afraid to use another one. So by using this Platinum Signal Service and getting in at this price of $100, all I ask in exchange for you having the service and using it, a lifetime membership for $100. I know it's really cheap, but it's a limited time. Offer expires Friday, midnight, October 7th. All I ask in exchange is that you give me your performance statement at the end of 30 days. I want you to have trades just like this. I want you to make on days when we make over 100 pips, you're going to make over 100 pips. Other days when there's only, 30 pips or 40 pips or maybe 70 pips of profits, you'll be doing the same thing with me because I'll be executing those trades for you if you're using the trade copier. So at the end of 30 days, you send me your statement. You can remain anonymous. I don't have to use your name. If you want me to use your name, that would be even better. I mean, it's all up to you. You're not obligated to do it. You're not obligated to even send me the statement. I would just like you to send me the statement if you're going to use the service. And then that way, I'm going to be sharing the statements that all of my new subscribers get on the internet and with anybody else that asks, new prospective subscribers in the future, and they can see what the actual performance is in your account. Again, that way, they don't have to worry about not trusting MyFX book or, not trusting my personal account. Everybody wants to know what kind of results everybody's going to get as a result of using this trade copier with many different FX brokers. There's, MetaTrader 4 platforms. There's different spreads that everybody's going to see. The connectivity with brokers. Everything changes. You can't keep everything 100% or exact everywhere. So as a result of doing this challenge, everybody's going to see the real inside look to what kind of profits people are really getting. Now, you can use the trade copier with any size account. You can use it with a $50 account. It really doesn't matter. There's no minimum. It's whatever your broker requires you to open your trading account with it. You can also use this Platinum Signal Service, the trade copier, with a demo account. So you don't have to start off with a live account. You can just put it on a demo account and see what it would look like for 30 days. And there's no reason not to if you want to do that, because you have lifetime access to use the trade copier if you purchase right now. So purchase right now with the Platinum Challenge. You get it for $100 and 95 cents, I think. And you get lifetime access. You can use it for the first 30 days on your demo account, and then when you see that it made a profit, you're happy with it, and you can continue to use it. And you never have to make any monthly payments, and you can then add it to your live account anytime you want. However you want to do it, you're not obligated to do anything that you don't want to do. I mean, you also can control the lot size and the leverage. So again, thank you very much. Congratulations for those who signed up over the last couple of days with the Platinum Challenge. You made a lot of money today. And I'm glad that you did, and I'm happy, and I'll continue to work this hard for you. And it's what I do. It's what I love to do. And I've been doing it since 2001. I've been offering my services since 2007. And as I say all the time, I'll be trading until I can no longer see the charts, and that's going to be a long time from now. So again, thank you very much. I appreciate your time in watching this video.